Hey guys, this is Pratik Oswal, founder and CEO of Glide Invest, and we are here to make investing stress free, one financial goal at a time. Welcome everyone. Today, our topic is going to be essentials for passive investing in India. As all of you know, passive investing is gaining a lot of ground in India. And before you get onto this entire trend, let's understand some of the essentials for passive investing in India. So, as you all know, investing is one of the most powerful ways of building wealth. And within investing, we don't recommend stock picking because we do think that more money is lost in trying to buy and sell stocks than it is on just buying and holding mutual funds for a long time. So we do think that mutual funds offer a huge amount of diversification apart from professional stock picking, which I think is a lot more effective than you going out there and trying to spend time trying to figure out which stock to buy and which stock to sell. It also takes out your decision of not really looking at the market from day to day. You can go on and I think make the best of your life and then make sure that your money is working while you sleep. So in today's scenario, there are two types of investing. One is called active investing and the other one is called passive investing. What I talked about earlier is basically what active investing is. When you give your money to a fund manager and he will use his discretion to figure out which stocks to buy and which stocks to sell. The other one is called passive investing, and I do think that passive investing should be also a part of your long-term portfolio when it comes to equity. So in passive investing, what is passive investing? It's basically trying to get returns by following an index. A Sensex or the Nifty are extremely popular indexes, and the whole idea about passive investing is to replicate the returns of these indexes. So if tomorrow the Sensex goes up 10% and you are invested in a Sensex index fund, then your portfolio will also go up 10%. So we do think that passive investing is extremely popular in other parts of the world, especially in the West, and we do think that it's going to be a big part when it comes to investing in India. So what is passive investing? Passive investing is a simplified version of investing. It is an compelling alternative to active investing, and what we've seen is that on average, passive funds tend to do better than active funds on average. What that means is, yes, you can do better than passive funds, but that requires you to go out there and do a lot of research. You have to understand there are hundreds and thousands of funds out there in India, and to be able to make sense of them requires a lot of understanding, a lot of research, and a lot of insights. So I do think that passive funds are simpler, they're low cost, and they have a 20, 15, 20-year track record, which makes them very effective as well. India also is growing a lot when it comes to passive investing. It used to be around 12,000 crore maybe 5 years ago, and today it's increased almost 40 times just in the last 5 years. Yes, a lot of it has come from pension funds, but yes, even amongst retail investors, it's becoming extremely popular, especially the younger segment. So that was passive investing. Three main advantages is, one is it's very cost effective. The other one, it's very relaxed. You don't have to worry about trying to pick the right fund. And third is it's very transparent as well. You don't have to go out there and try to select. You know exactly what your stocks you're holding in your fund and what is the proportion, because you're merely replicating the index. Within passive funds, there are two options. One are ETFs and the other one are index funds. Index funds are like regular mutual funds. You go and you can buy it once a day and you can expect the units to be delivered to your mutual fund account the next day. ETFs are passive funds that are traded on the exchange. So you can buy an ETF in the morning and sell it in the evening. Unlike index funds, for ETFs, you have to have a demat account and you cannot set up SIPs. So I would recommend that investors who are looking for a long-term approach, I think index funds are slightly simpler in terms of approach. Also, passive funds is recommended by some of the greats in investing, and globally. So if you look at Warren Buffett, or if you look at Burton Malkiel, or even John Bogle, who really launched the first index fund, they do believe that it is one of the best ways of investing long term. So how can you join the passive investing wave? I think it's important to understand that You have to invest on the basis of your risk profile. So I would recommend investors to only invest if they are able to handle the volatility of equity investing. So someone who is conservative should stick to large cap funds, and only someone who is able to take the higher risk should look at mid and small cap funds in the passive investing space. I think one way of identifying your risk profile is to do a risk profiling, free risk profile on our website. Feel free to go out there, and we'll be more than happy to share the results which you can use and go about going out there and selecting your passive fund. So thank you so much, and look forward to the next session. Thank you. You can listen to us out here or check out our website www.glideinvest.com. You can follow us on LinkedIn, Facebook, Instagram, Twitter on @GlideInvest. If you want to reach out to me, then I'm at Pratik Oswal 88 on Twitter. Cheers and happy investing. See you guys next week.